Starting with L'Oreal, which is a French cosmetics and consumer products group, focuses on hair and skin products.
And the reason we talk about it is the largest company in this particular space. So it's listed in France, but it's also available to investors in New York. And as a result, we put it up here, and it's got an interesting corporate structure. We'll go into that in a
minute. Market cap 100 billion euros, PE of 32.7, and a dividend yield here of 1.8%. Let's get the share price graph, and you can start with that story. At the heart of it is Lillian Bettencourt.
Yeah, good that you've mentioned that. So there you go. You see the share chart looks pretty solid. As far as the ownership structure is concerned, the Bettencourt family, which is the sort of descendant of the founder Eugene Schürrle, this is a 95-year-old French woman who has sort of lost her mind and has been placed under guardianship. But that company is 30% owned by that family. So there's a bit of a grandson-children thing going on. And then the other shareholder is Nestlé.
30% is a hefty stake. Does that put us with a little uncertainty over this one?
Yeah, I mean, in terms of the family stake, I don't think we're too uncertain. I think where the uncertainty comes from is the Nestlé stake specifically, because even though it's non-core for Nestlé, I mean, if you think about what Nestlé actually does, it's a food producer and a food distributor. So it's non-core for Nestlé, and I mean, there's been an overhang around this for years and years and years, and the expectation from investors is actually that L'Oreal needs to buy back those shares from Nestlé. So they don't want Nestlé to suddenly one day decide they're going to sell this stuff in the market, because that'll be very bad for L'Oreal. They need to, in a controlled way, buy back that 23%.
Why hasn't this happened? As you say, investors have been expecting this.
Well, it did happen. A third of the stake was bought back in 2014, so they did do that, and it was largely
But there's still a
23,
when 2014 is 3 years ago.
Yeah.
Yes.
So I think that Nestlé is quite comfortable with how L'Oreal's doing, and L'Oreal's quite comfortable with the shareholder. They're not really trying to influence the business in any sort of way. So I think that they also want to move to further consolidate the beauty industry. They want to use their money rather to do earnings accretive acquisitions and to really grow the luxury brands portion of their business. Focus on marketing and e-commerce.
Paul, this is one that you do hold for clients of yours in international portfolios.
Yes, we do. And unfortunately, when we put the hot stocks portfolio together, we couldn't have like a plethora of stocks. That one that just fell off the list, but it's one that we've liked and we've enjoyed. Remember, it's got about 35% of its sales from Europe, another chunky sort of 20-something% from the United States of America or North America. But it's very well positioned in Asia, Africa, and Latin America. It's worked very hard. I mean, even here in Joburg, you'll find that there are L'Oreal production assets. There's a local research studio where they're looking specifically at the health, beauty, cosmetics and hair care needs of African women. So it's a very well-rooted company with tremendous upside potential linked to urbanization.
We have seen upside in the share price to this point. Is there more upside potential in your opinion?
It depends on their continued ability to make earnings accretive acquisitions, because the targets that they are acquiring are becoming more expensive as well, because it's not only them trying to grow their business through acquisitive means. What makes L'Oreal a little bit more different is the fact that it's got a massive runway in terms of organic growth, and specifically in that kind of digital space. Online beauty sales is a big growth market globally. I think it grew by 19% last year. L'Oreal grew by even more than that. So there is still scope for growth. It looks a little bit stretched in terms of valuation.
Well, do you agree? A little stretched from a valuation perspective?
No, it's looking cheap to me.
Hot or not?
So I think I would always back a winning horse like L'Oreal, so it is a hot from me, but I would just like to caution that near term there will probably be a shift out of defensive stocks into more cyclical stocks in the US and in Europe, because those economies are actually doing pretty well. Even though we're not feeling it right now at home, a stock like L'Oreal might fall out of favor short term, but it's still a great long term.
So long term play, and of course we are, as we said earlier, all about the long term here on hot stocks. So a hot, and sir?
Definitely a hot. I think it's definitely one to accumulate in the first list of stocks you look at globally.